Don't talk enough about it. Let's talk commercial real estate nationwide. Who better than from Citigroup, Thomas Flexner? Let's bring him in here right now. What's doing the worst right now in commercial real estate? Is it strip malls? Is it a big mall outside Minneapolis? Is it some trophy property? Where's your biggest headache?
I think the biggest headache right now are retail shopping centers that are not dominant in their markets or are in markets that are struggling with high unemployment and slow economic
So it's
growth.
still in those weaker cities.
Still in those weaker cities. The new thing that's really just emerged in the last several years is competition with the internet. That is beginning to make a difference at the margins in terms of physical retail store productivity.
Okay, this is important. We look at the stores. I see this in New York City. I get so much mail on this around the nation. The brick and mortar is empty. Give us an update on what fancy guys like you talk about when you talk about the future of brick and mortar away from some trophy property on 57th Street.
Well, I think what we talk about primarily is the long-term bifurcation of the market across retail, office, multifamily, in terms of the highest quality, supply-constrained locations versus everything else. Everything else is very sensitive to whether or not we have meaningful economic recovery. That is less so with the dominant assets.
Dumb question of the week. Let me start on Tuesday. Pim Fox bailing me out yesterday, and it was wonderful up at Brandeis University speaking with their students. My dumb question, how many trophy properties are there in the United States of America? Is there like a trophy list?
There's a trophy list in the office sector and the regional mall
office sector.
Yeah, but I don't know how
Are there
many
like
there
20?
are. But let's say if you have a aggregate commercial real estate sector in this country that today is worth, let's say, somewhere in the mid-4 trillions.
Right.
Perhaps you could call 15% of that, to pick a number,
15%.
As really being strong defensive asset quality.
Okay, let's go the other way here. NFIB today, thanks to Bill Dunkelberg for his appearance on Bloomberg Surveillance Radio. Here's just the general business conditions. This is not the main series. This is what the rest of the real estate market is up against. And what I noticed there is, look at the blue over on the left side of the screen, that small business optimism. How much does a hitter like you care about small business?
Well, at the end of the day, I think we care about small business because they're one of the drivers of macroeconomic growth generally. And, you know, real estate is a responder industry at the end of the day. It responds long-term to new job creation, increases in consumer capacity to spend and so forth. So small business is very important for the health of the real estate industry.
Here we go again. We've talked about this before. Tom Flexner, buyers distant from sellers. This is the NAR leading commercial real estate index. Off a cliff, you see that little bit of stability over on the right side. Where's that going to be a year from now?
You know, I think it's going to be relatively flat a year from now. I don't see any major dislocation in real estate per se. The market right now is being supported by, you know, the very attractive dividend yield, for instance, in the public real estate sector, the REITs, relative to the 10-year Treasury. The average REIT dividend is somewhere around 3.7%. We've seen pretty significant mutual fund inflows this year, probably higher, frankly, than they've been in the last 5 years, and that is supporting public real estate values, although those had gotten sufficiently toppy that by the end of July, they themselves have also come down between 10 or 20%, depending on the sector.
Quick chart I want to look at. This is residential real estate. Of course, this is where we focus most folks. Real inflation-adjusted residential construction is part of the GDP component, and it looks a lot like that previous chart. How closely linked are the residential market series and data to commercial real estate? Do you look at them as really intertwined, where you care about existing homes?
We do care about it at a lot of levels. The most direct correlation is how it affects the multifamily rental market and people's decision to be renters as opposed to owners. And one of the things that has occurred as increasing numbers of people don't view home ownership as a necessary path to wealth creation, is they're beginning to gravitate towards the rental option, coupled with the fact that it's increasingly difficult for first-time buyers to get mortgages.
Jumpstarts the commercial real estate process. Is it investors going to developers? Is it developers going to investors?
I think it's almost always developers going to investors, because if you give money to developers, they will build regardless of the outcome. That's always been the nature of developers, probably always will be. But it's very hard to get equity capital today for new development, with very few specific exceptions. Few deals in New York City are happening as we speak on the office side. But there's also a real constraint on the construction lending side. The risk-reward relationship has changed. Banks in general have pulled back, and much of the capital that came for construction came from the European banks. They're not quoting anymore because they're dealing with their own problems.
They're surviving.
Yes.
So, well, let's see what the rescue is. Let's bring up this chart. You can see it down. Look at my new. Do you like my new tie? I wore it for you. It's like a bright blue thing. Too much information. Like the New York real estate market, Flexner considers a gift, which is currency. Now we had a 160 euro, and as you said, the European banks came in. Here's Asia ex-Japan as a persistent proxy of strength for those Asian currencies. Jonathan Miller of Miller Samuel was telling us today Miami's at the margin being bought by the Brazilians. Do the Asians come to the investment rescue for our new buildings?
I think that it's unlikely at the end of the day that they'll come in a very meaningful way. First of all, it's not that easy to get money out of some of the major economies like China, Japan,
or
Singapore is a freely, tradable currency, and you're seeing some capital come out. I just have a friend in Singapore who bought an apartment in New York and was somewhat price insensitive. But for the most part, I don't think that China and Southeast Asia are going to be major drivers of real estate values in the United States.
Let's switch gears. Maybe this is what they invest in, and I don't know it. It's an elegant chart. I'd sing the song Jefferson Starship. It was a demo. We built this suburb. There it is. Okay, the national series going back to the 90s. San Jose doing a little bit better. It's sort of a boring chart, to be honest, but when you look at suburban vacancies, which is what we see there, what does it tell you? I'm reading about Walmart building smaller stores, this kind of thing.
Okay, it tells me that it's like having a permanently higher level of structural unemployment. It seems like the occupancy levels in most of suburban America are almost permanently set at double digits because too much was built. And the prospect of absorption, which again is totally dependent on job growth and GDP growth.
Well, I don't want to pin you down like an economist, but how much of our 9.1% unemployment would you ascribe to the collapse of the real estate business, whether residential or commercial? Just to, I know we're playing here, but just a rough number, 2% of that 9.1?
I would think it's, that 9.1 is what, 15 million Americans? 2% would only be 300,000 people. So I think it's considerably more than that that lost their jobs in the aftermath of the downturn. And most of that was on the single-family residential construction side, but clearly on the commercial side as well. A much bigger component of the unemployment consequence was from real estate.
How do you build a skyscraper?
From the bottom up.
From the bottom up. Is it for guys like you in finance? Is it something you care about, the engineering of a skyscraper and the productivity of building something up 60, 80 stories?
I would say from a finance standpoint, we don't care about that as much. We do care about our engineering reports and engineering consultants saying this is state of the art, this is structurally sound, this is...
Jonah slide rule, right? Tom Flexner, thanks so much.